morning and welcome to the Uncertainty Brief, your Q4 reset for a strong 2026. I'm Paula Skaper, and I'd love to introduce my co-host, Susan Goebel. Susan, how are you this morning?
Oh my goodness, Paula. I'm telling you, the uncertainty brief starts out with a day where we do our first live stream and we have an AWS outage, which
Yep.
affects our streaming platform. So it's been a bit of an adventure from a technical standpoint on the back end, but you know what? Live it, learn it, teach it.
Technology's a grand thing.
It really does. So Paula, this is great. I'm so excited that we are here doing this today because Q4.
Yeah.
It's an important time. Maybe I think those who haven't known us that might be watching us, perhaps we can maybe do a little bit of an intro. Do you want to go first?
Sure, yeah, let's do that. So my name is Paula Skaper. I am the founder of 33 Dolphins Growth Strategy. I'm a business performance architect based in Vancouver, Canada, and I work mostly with companies on revenue engineered optimization and operating systems. So Susan, tell us a little bit about you.
Well, thank you, Paula. My name is Susan Goebel. I am CEO of Scaling Management Consulting Group. Operations and operation efficiency is my jam. We're based in Ontario, serving clients in Canada and the United States, and having a lot of fun with this year with the cross-border pieces that have come to play. And we're going to talk a little bit about some of the uncertainties, but maybe we can hop in first about why we're having this chitty chat.
Well, I think you just brought it up. I mean, this year has been nuts, really, after decades of trade certainty between, our countries. There has been some interesting upheaval and turbulence, I like to call it this year. And a lot of my clients, I know you've shared a lot of your clients as well, have been not really sure where to go. We're finding our way as business leaders and really looking for some support. It's Q4. It's planning season. And the worst thing that companies can do right now is put off planning, hoping for a little stability in the new year to help them figure things out. And that was kind of, I think, the conversation you and I had that got us going on this.
Well, it was. And, it's hard to believe that we started this conversation back in the early part of February and we're in October already. Like, my goodness, where has the year gone? It's just been so quick. I think when I reflect back on this year, after it's long gone, I'm going to continue with the theme, which I've kind of indicated is that people have lost it a little bit. Whether we're business owners and we're putting our heads in the sand because, oh my gosh, the changes are really once in a generation type changes.
Mm-hmm.
Some of us Canadians have certainly seen currency hits and currency risks. I know
Yeah.
I was paying my team in the US and it was like 1.5, which
Ouch.
was which I gotta admit, it hurt.
Yeah.
Compared to its standard, which maybe other people don't know, is normally between like 1.35 and 1.3 in the last couple of years. And so, we've experienced so many different pieces this year that we just have not seen, many of us, and it's got some impact for sure. Whether you're a solopreneur, whether you're in manufacturing, I have a client who has taken over from, it was a second generation for the family. And she took over the year that Russia invaded Ukraine. And most of her products originally came in from the Ukraine. And that's
Wow.
ethically sourced and environmentally sensitive and all those pieces. And now she had to deal with all of that. And this year's been another piece with, another hit to the business of cross-border. And then we have government shutdowns and we have Canada Post strikes and the amount of things that businesses in general have had to deal with this year has been vast and varied.
Yeah. Absolutely. And add on top of that, AI just exploded in 2025. So there's technology change at a massive scale. I mean, the impact that AI is going to have on the way we operate our businesses is akin to the impact that the internet itself had on the way our businesses operate. It's massive, massive impact. And with all tech change, there's a period where the hype and the promise exceeds the reality. And we're right in the thick of that right now, where there's a lot of promises being made and a lot of money being invested in technology that's not always paying off. And businesses aren't in a comfortable place to throw a massive investment at technology only to find out, hey, that was a bad idea. That didn't work the way it was supposed to, and have to backtrack. So, I mean, everything just is happening at once right now.
It truly is. And I think if we go back to the theme of the pace of change
Yeah.
has really increased beyond where it was, a decade ago, even, let alone 2 or 3 decades ago, if your business is that old. And so how do you adapt and how do you manage some of the different pieces in this change management era that you need to manage? And so I'd love to bring this conversation over to an article you brought to my attention back in
Mhm.
February. And
Yeah.
I have loved that article. I think I've told everybody I can tell about that article. If you haven't seen it, it's a Harvard Business Review. So there's a nice link somewhere, I'm sure, to the Harvard Business Review. And the article's called Roaring Out of Recession. And Paula, can you, since you brought it to our attention, can you please
Yeah.
tell us a little bit
Yeah.
about
So
that?
I actually came across that article back in, oh, I think it was 2020 that I came across the article. When
Another
we were all
period of
shut in.
change, by the way.
Yeah. We were all shut in over COVID and thinking, hey, if we just get through the next few weeks, we can leave our houses, we can take our masks off. 3 years later, so I came across the article, and I was doing a bit of research for my book that's coming out later this year on, what works when we're in these periods of upheaval. And fortunately for us all, Harvard had done a really great study, and they published a summary of their findings in that article, Roaring Out of Recession. And I was surprised at what worked and what did not work. It's quite telling.
Well, and I think that a lot of people go into these levels of uncertainty. And, if we looked
Mhm.
at the time period this year in 2025 between beginning of February and into the beginning of May, there was a lot going on. Things were up, things were down, they were sideways, they were no, wait, oh, maybe. And you think, okay, so maybe I should just pause.
Mhm.
Maybe, do I have enough in the bank to be able
Yeah,
to withstand the uncertainty that's going on and the ebb and the flow? Because I know there was a lot of people that their lead flow just stopped. A lot
yeah,
of businesses
oh
had
yeah.
challenges with that. And so how do you deal with that? How do you become more operationally efficient so that you can save as much money, still invest in the business? And what is the best strategy? And that's what I loved about this particular
Mhm.
article, is that it really focused on, top level, high level, and it did have some surprising pieces in it.
Yeah. Well, I mean, the thing is, you brought it up, right? The intuitive thing, the pragmatic thing, the smart thing, the thing our mothers told us to do, put a penny away for a rainy day, is when you're faced with a major shock, you stop, you assess where you're at, you assess your runway, you figure out how long you can sustain, and you do everything possible to extend that runway. The problem is that when you do that, you actually weaken your chance of sustaining and extending the runway. The thing that feels and sounds the smartest and the most logical is actually the thing that will guarantee your failure. And that blew my mind. And so maybe we should talk a little bit about the article itself, right? Because we've both read it. Not everybody watching us has read it. So, what the article showed, they studied companies after the 2008 financial crash in the US. And they looked at which companies came out ahead, which companies survived but weaker, and which companies failed. And what they found was basically, you got two options, right? You can lean into growth, or you can conserve resources, cut costs. And the companies that did one or the other extreme, not good results. They either didn't come out of the crisis at all, or they came out of the crisis, but much weaker. And in fact, some of those companies haven't recovered today. And we're talking Fortune 500 companies with really deep pockets. So imagine, clients, your clients, my clients, you're 10, 20, $30 million, you're a privately owned firm, family businessy, legacy business. You're not sitting on a few billion in the bank to sustain you for a growth. So when a large company, can't do that, and I'm not going to name names. You want names, go read the article. But when a large company can't do that, what's the hope for the small business? The thing is, the thing that works is totally accessible to the small business. And what the Harvard review found was that if you, one, focus on, instead of cutting costs, focus on optimizing operations, which I know you loved. Um, be as efficient as you can with your operations. And specifically, the companies that did really well with this did two things. The first thing they did was they preserved their human capital. So they
Which is
avoided
really important. Let's
layoffs.
say that one again. They preserve their human capital.
Yeah, that
So,
institutional knowledge that exists within the people and the experts you have on your team, the money you've invested in trading on them, when you're laying them off, you're throwing out all of that money. And so they did everything they could to preserve that human capital. But the other thing that they did was they made capital investments in things that would increase the capacity of their existing people. So they focused on increasing capacity and optimizing operations, which interestingly, we're in an AI world right now. So it doesn't matter what you do, like you can use AI to augment your people and make them more productive, more happy in their jobs, more satisfied, more fulfilled by leveraging AI to do what AI does best, which is the work that humans really don't love, most of us. So that was part one of the recipe. Part two of the recipe, though, was they leaned into marketing and sales development. And that doesn't mean they spent more money. That doesn't mean that they spent more money, which is the interesting thing, right? We think, oh, yeah, they threw money. No, they maintained their investment in their marketing activities. They stayed visible in the market. They um, opened new, so Target's a great example. They opened stores during the financial crisis. They maintained their marketing investment. They improved the efficiency of their operations. What that meant in the broader scheme of things was that they were able to operate more locations without massively increasing headcount, which drove greater revenue. At the same time, the margin on that revenue was larger, which helped to fund maintaining their marketing levels at where it was. And in a downturn, when everybody else is doing the smart thing, the pragmatic thing, guess what's on sale? Attention. So your advertising investment goes further simply because nobody else is bidding. So, in an auction when no one's bidding, you get a pretty good price. And this is what worked. And it wasn't just Target. And I said I wasn't going to name names, but there's one. It wasn't just Target. It was other businesses as well. Across the board, only 9% of companies actually pursued this strategy. Those companies came out of the recession financially stronger than they went into it. They also had more market share, and nobody else recovered, which was the crazy piece, right? And with my research, that kept showing up in a time and time again. So it wasn't just the 2008. I found examples from the Depression. I found examples from the 70s stagflation. I found examples from the crash in the early 90s. Like this is a pattern that consistently shows up. And that's what we got to talking about.
which was super interesting. Obviously, I love the operational efficiency standpoint, but
Yeah.
the marketing one I think was my big surprise because when I look at operational efficiency, you're going to make money, you're going to
Yeah.
save money, protect your profits, all these different things. Where can you invest? Where can you cut that doesn't have an impact in what you
Yeah.
do? One of the things that I always found interesting whenever I go into a company is one of the first things I like to look at is their tech stack and their tools. And we talk about AI and automation a lot because of what's gone on this year. the capacity that's out there is insane in order to augment what we are already doing and allow us to stop
Yeah.
doing those manual tasks. I think the quote was 20 to 30% of our time is actually spent moving data at this point.
Yeah.
And I do it myself, right?
Yeah.
I record or I do something over here, but then I actually need it in this platform over there, and then I have to download it, and then I have to move it so I can upload it, do what I need, and then I have to do it again in the reverse in order to put the information where it needs to go. And so implementing some of these pieces of tools and technology, not on a day when AWS goes off.
I was just
It's
thinking,
a bad
yeah, we
plan.
had this all set up, best laid plans.
But it allows humans to do what only humans can do. It's not something to be fearful about, and it's not something to go, oh my gosh, it's going to take my job. It allows me to then do the things and the outreach and the personalization and the human to human touch that only I can do.
Yeah. Yeah. And it's possible today.
It
Now,
is.
as we're demonstrating very effectively this morning, um, technology will only get you so far, right? Because when AWS goes down, it has a big impact on the world. So maybe we'll talk about redundancy on another episode
Redundancy.
and having your failover.
Well, and you and I have lived through the 2003 outage.
Yeah,
Oh, wait, you were in you were
I
in
was
that
in
part of the
I was
country.
in BC. Yeah,
Yeah.
yeah, we got to look on you all and go, oh, that's so hard.
But most people, when they look at their business today, they're in the cloud,
Yeah,
right? If the power goes out, you're pooched. Back then, I kind of chuckle at where I was in 2003 when that happened, because I was working on a laptop in an office, and of course everything was right there. The server room was there and stuff. And so while I didn't have my lights on either that day, and so all of a sudden it's a lot of commotion. I'm like, what's going on? Oh, the power's out. you know, the laptop was still working. But the connection was a hardwired connection to the server room. Um,
yeah,
but some of these different things that we don't think about as risks to our business when we're talking about uncertainty, to bring it back to the Q4 planning
right.
and strategic pieces that we need to be thinking about going into 2026. That's where you and I wanted to have a
Yeah,
conversation with people today.
yeah.
Maybe tomorrow, same time, same bat channel.
Well, we will be here tomorrow, same time, same bad channel. In fact, we're going to stream every day at 9 a.m. until the 30th of October. So
9
we'll be
a.m.
here
Pacific, Monday to Thursday, because
Monday. Yes,
we don't do Fridays or the weekends. Sorry, guys.
got to work sometime.
Well, we do. We do. So it's very interesting conversations to have, though, about some of the different risks and things to the
Yeah,
business, that as we look at the uncertainty that's happened this year. And I think the other thing that we need to talk about, and I'm sure we will over the time, are all of those macroeconomic trends. I was exercising this
mhm.
morning while listening to a book, the fourth quarter, turning the fourth quarter. I've forgotten the name of the book. How bad is that? But it's essentially the same thing that Ray Dalio talks about in his economic principles, where we're in winter, if you
Mhm.
will, and what do you need to be thinking about in order to get to spring, and how should you be planning, and how long of a window will it take?
And I mean, so much of business is more like farming than hunting. And for whatever reason, we treat it like a hunting exercise, right? We're just going to charge out there. We're going to find the lead that's standing there with their credit card out. We're going to close the deal. And we have this very compressed view of what it actually takes to close that piece of business. But so much of business is about farming. You've got to plant the seeds and you've got to nurture those little seeds and those budding shoots until the harvest. And unfortunately, when we pull back in a time of uncertainty, what we're not doing is tilling the ground and planting the seeds. And so when we decide, hey, we're ready to eat, there's no crop to harvest. And we still have that whole time lag piece to get through. And so I think we really got to talk about, what winter means and how you capitalize on winter, because winter has a purpose, and how you capitalize on spring so that you can have that strong that strong 2026, right? And what crops, what are you planting now for spring? What are you planting in spring? For a lot of companies, that has changed. There is opportunity out there right now, massive opportunity. In fact, there are more billionaires made during a recession than at any other time in any other economic cycle. If you want to make a lot of money, this is the time to do it. Conversely to what it feels like, right? So we're going to talk about all those things. And so every day for the next just about 2 weeks, Susan and I will tackle a different topic with respect to your Q4 planning and things to keep in mind as you head into 2026 and what to be thinking about that maybe isn't what traditional wisdom is telling you you should be thinking about right now.
I love it. Well, why don't we
Yeah.
wrap up today so we can get back to doing other things and then come back tomorrow?
Fantastic. We'll see you all here tomorrow. That's October 21st at 9 a.m. Pacific, noon Eastern.